welcome to The Trade. Before we get into the technicals, a quick look at what traders are watching. And Federal Reserve Governor Christopher Waller has said he's advocating for an interest rate cut in December, saying his concern is mainly the labour market in terms of the dual mandate, and that you could see more of a meeting by meeting approach once we get to January. Economic growth in the US expected to increase slightly next year, but employment gains will remain sluggish and the Fed will slow any further rate cuts. This according to economists polled by the US Business Economics Association. The median outlook for growth of 2%, with respondents citing tariff impacts as the greatest downside risk to the economic outlook, and tougher immigration also seen as depressing growth. Meanwhile, on the geopolitical front, US and Ukrainian officials seeking compromise over a plan to end the war in Ukraine after agreeing to modify a US proposal. US Treasury yields declined on the possibility of a rate cut next month, and the 2-year close to 3.5%. Markets pricing in a 70% chance of a 25 basis point cut at the December meeting. Having a quick look at currencies, a little bit mixed. The Aussie dollar buying 64.6 US cents. Let's get into the difference now between successful traders and boom and bust traders. Mandy Rafsanjani from tradingpsychology.com.au joins me. Mandy, great to see you. I mean, this has been the big question that we've been asking. What sort of fundamentally changed in terms of what we've been seeing with market sentiment? And how do you sort of play this here? Because fortunes often are made when markets are down.
Yes, really interesting. Nice to see you too, Juliet. Really interesting market at the moment. So what I noticed that in the last week, I received a lot more emails from traders who went through the boom and bust cycle. So the week before, when the market started coming down, they made a lot of profits, and then they started giving it all back last week. And what I noticed is they all have the same emotional pattern. They stopped doing what made them profitable in the week before, following the trend, and instead they started fighting it. And it's really a pattern that I see over and over and over.
So what does this show us here, Mandy? We just lost you for a second. What does this show us, and I guess the difference between successful traders and boom and bust traders?
Yes, so these are actually two real life equity curves from two of my traders. And you can see the one on the left was making profits, and then in one day lost everything and more. On the right-hand side, this is a trader who makes several $1 million a year, and he is consistently profitable. And what that looks like for those kind of traders, like Linda Raschke, for example, she always says that she makes 70% of her profits in 30% of her trades. Whereas the boom and bust traders, they do it the other way around. They lose 70% of their profits in 30% of their trades. And you can really see the emotional patterns of the boom and bust traders. They're really showing on their equity curve. It's very, very interesting.
So why do you think that we see the sabotage of some traders? Is it because basically, we have emotions unlike the computers?
Yes, exactly. Now, what we look at is something that we call the polarities. It's what we call in coaching the polarities. So behind every greed and fear is an emotional experience. And greed is basically disguised in fear, and fear is disguised in greed. And that goes back to the Newton's laws, where every action has a reaction. So it's basically the same concept, the same pattern. So what that means is that when the traders started to make profits, they started getting hopeful. They started saying, and I hear that so often, I started to feel relieved that I can finally make it. And they start telling their families and their friends that they're going to quit their job and they're going to be full-time traders, and they feel really, really good about themselves. That's when they're going into the euphoric state. And as we all know, in a state of euphoric, we don't make really good trading decisions. And suddenly they become outcome focused. They don't want to give back any losses, and they start holding on to losses. And they are worried about letting their winners not run long enough. So when they cut a winner too early, they get very resentful. And what I found really interesting, again, the pattern is when a trader had a really big profit and they cut their profits too early, the market continues without them, they start looking for trend reversal trades. So in this case, a lot of traders emailed me looking for going long, and they were trapped in those long trades. And maybe that's why the market kept accelerating, because there was quite a lot of traders going long in this really unrelentless market going down.
So then I guess, Mandy, the difference then between fear and greed, and how you sort of see that play out.
So when we look at fear and greed, that's just a surface level experience. And what we want to do is we want to reverse engineer what is actually really going on that causes that behavior of not following our strategy anymore, not having discipline anymore, because lack of discipline essentially is all based on or driven by those crazy emotions, right? The euphoric, the fear. And when we look at, okay, so now I really wanted to make that profit and I was too greedy and I didn't get out quick enough and the market turned around, then we want to look at what is the other side? What's the fear? And often it's the fear of staying stuck in that life that they have, or they feel shame that they are in a place in their life where they thought they would be much further. So it's always something that they try to avoid. So when we want something really badly, it's because we experience that we lack it, that we don't have enough of it. And that then causes the what we call the outcome-based thinking. They don't focus on their strategy anymore. They focus on, I don't want to give that profit back. Just I want to make these winners. I want to get out of this job. I want to pass my evaluation, whatever the outcome is. And so what I see with my really successful traders, they have learned to manage themselves. So when we look at winning traders and losing traders, the winning traders, they have a conscious strategy on how they manage themselves losing and winning. So they're very proactive. I have a trader who had his first $1 million day, and we knew that he's then going to go into being euphoric, right? It's an amazing, amazing result. And he put on his monitor the Black Mamba, Brian Covey as quote, "The job is never done," because he knew if he's not going to humble and ground himself, the market is going to humble him. So the successful traders, they know themselves really, really, really well. Whereas the losing traders, they are more reactive to their emotions, to what happens in the market. They constantly try to catch up on things.
So, Mandy, is the loss then, more psychological than actually the dollar cost loss?
Yes, it's always like that. It's never about the money, even if we think it is about the money. And then if we want to change our behavior and we want to start going into process-focused thinking, we need to look at what is it that we really fear. And then we can manage that. So for example, I fear that I will never make it to become a full-time trader. And then we can look at it and say, I will find a way because other traders have made it, I can make it too. What is it that's missing? And then we can start looking at the statistics. Like, this is such an eye opener for my traders when we go through their statistics. Like when we look at the MFA and the MEA, the favorable excursion and the adverse excursion, meaning how much did the trade go into profit before they closed the trade, or how much did the trade go into a loss before they closed the trade. And then we can really optimize our exits. And again, I find the exits are usually more emotional for traders than the entries, because it's like, I'm in this profit, so should I get out, should I stay in? What if I get out and then it continues without me? What if I stay in, then it turns around and I have to give all that money back again? So it's always that emotional thinking that gets in the way.
And that means emotional awareness. I think we all know plenty of fully grown adults, Mandy, that don't have a lot of that. How do you get around that?
Yes. I call that self-leadership. So when we are, I mean, who hasn't had a block of chocolate and promised themselves, I only eat a little bit, and then before they realize it, the whole block of chocolates is gone. Right? So this is, for example, where we don't have emotional awareness. Only after the block of chocolate is gone, then we realize what happened. So when we want to develop emotional awareness, we want to again reverse engineer what happened when I let my trade, when I let my loss run too far. For example, we want to write down the sensations, the thoughts that we had, and when we have this kind of data, we can become proactive. So, for example, I know when I in a good profit, then the fear kicks in that I mess it up. And then I can manage myself first. That's the emotional awareness of knowing yourself really, really well, because we are only as strong as the weakest link in our mindset and our skill set and our market edge. So
Yeah.
that's really where everything starts.
Indeed. All right, Mandy, a power of the mind. Thanks so much, Mandy Rafsanjani from tradingpsychology.com.au. That does it for this edition of The Trade. Be sure to join us next time.